Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Let's start with the current state of the housing market in Toronto, Janine. The Greater Toronto Area is seeing some significant shifts, with home sales dropping by 23.3% in April compared to last year. What's your take on this?
Steve, it's certainly a changing landscape. With the average selling price dropping by 4.1% and new listings increasing, it's becoming a more buyer-friendly market. However, there's a lot of uncertainty for first-time buyers who might feel overwhelmed by the choices and the current economic situation.
You're right. Leah Zlatkin from lowestrates.ca pointed out that first-time buyers are making some critical mistakes, like holding off on purchases, hoping for deeper rate cuts. This could backfire if demand spikes again, pushing prices up despite lower rates.
Absolutely, Steve. And there's more to consider beyond just the mortgage rates. Many first-time buyers might not realize the additional costs of home ownership, like home insurance, utilities, and property taxes. It's crucial for them to have a clear understanding of all these expenses.
Exactly. And Zlatkin also emphasized the importance of professional guidance. A broker can provide a comprehensive view of the market, helping buyers make informed decisions. It's all about being prepared and having the right support.
Yes, and with Toronto's unemployment rate at 8.4% and inflation at 2.3%, there's broader economic uncertainty that buyers need to navigate. It's essential to stay informed and weigh the pros and cons carefully before making any decisions.
The Toronto Regional Real Estate Board noted that the current market conditions offer a lot of choice for buyers, thanks to elevated inventory levels. This could be an opportunity for those ready to negotiate and secure better deals.
Indeed, Steve. The market's affordability and supply are improving, which could lead to increased transactions if consumer confidence grows. It's a pivotal time for potential buyers to consider entering the market.
Janine, let's delve into the latest report from Equifax that highlights a concerning rise in mortgage delinquencies in Ontario. The report indicates a 71.5% increase in the mortgage delinquency rate during the first quarter of 2025 compared to last year. This is mainly attributed to the low interest rates during the COVID-19 pandemic. What's your perspective on this?
Steve, it's quite troubling to see such an increase. Kathy Katsouliris from Equifax pointed out that the ultra-low interest rates during the pandemic led to a surge in home purchases. Now, as those mortgages come up for renewal, homeowners are facing significantly higher rates, which is creating what's known as payment shock.
Exactly, Janine. This payment shock, combined with the current high cost of living, is making it difficult for many to manage their mortgage payments. Equifax also noted that the issue extends beyond just mortgages. Non-mortgage delinquencies have risen by 24% in the same time frame, indicating broader financial strain.
It's a challenging situation for many Ontarians. With the cost of living on the rise, it's becoming increasingly hard for people to keep up with their debt obligations. The report mentioned that credit card debts are being racked up at a slower rate, but people are also making fewer payments on their credit cards, which could exacerbate the problem.
That's a valid point, Janine. This financial strain is further compounded by higher unemployment rates and inflation, which have been persistent issues over the past few years. It's crucial for homeowners to seek professional advice to navigate these challenging times.
I agree, Steve. Professional guidance can be invaluable in helping individuals manage their finances more effectively. It's important to explore all available options, such as refinancing or restructuring debt, to ease the financial burden.
Absolutely, Janine. It's about being proactive and informed. As we see these trends unfold, it's clear that the post-pandemic economic landscape requires careful planning and strategic decision-making for homeowners and consumers alike. Let's discuss the recent report from the Task Force for Housing and Climate, Janine. It argues that provinces hold the key to unlocking home building, despite the federal and municipal efforts to expand housing supply.
Yes, Steve. The report is quite revealing. It seems that no province scored higher than a C+ when it comes to policies for building homes quickly and sustainably. That's concerning, considering the housing crisis we're facing.
Absolutely, Janine. Mike Moffat, the report's author, pointed out that provinces have largely avoided scrutiny for their role in the crisis, while federal and city governments have been criticized for red tape and high costs. He suggests that provinces have the most policy levers, yet have done the least to address the issue.
It's interesting to see such a variation in scores. The federal government received a B, while Alberta ranked at the bottom with a D+. Moffat also highlighted that provinces like Saskatchewan and Ontario are doing well in building away from high-risk areas, but are not increasing density effectively.
Yes, and it's worth noting that British Columbia, Quebec, and Prince Edward Island received the highest provincial scores of C+. However, BC's slow permit approvals and high building costs are hindering development, despite its encouragement of density on paper.
Alberta's situation is quite unique. Premier Danielle Smith stated that the government isn't standing in the way of the private sector building more affordable housing. However, Moffat argues that Alberta needs to take responsibility for housing demand. It is inducing through marketing campaigns and also ensure homes are built sustainably.
Moffat makes a valid point, Janine. Reducing development barriers is crucial, but provinces also need to fill gaps in social housing and ensure sustainable development. It's not just about increasing supply, but doing so responsibly.
Exactly, Steve. The report emphasizes the need for both a strong private sector and government intervention to address these gaps. Provinces need to improve in areas like floodplain mapping and reducing development charges, which can have significant impacts on housing affordability.
The report also suggests that the federal government's Housing Accelerator Fund has made progress, but lacks enforcement tools to hold cities accountable. This raises questions about how effective such initiatives can be without proper oversight.
That's right, Steve. It's a complex issue that requires collaboration between all levels of government and the private sector to ensure that housing needs are met effectively and sustainably. It's crucial for provinces to step up and take a more proactive role in addressing these challenges. Steve, let's dive into EQB Inc.'s recent performance. Despite a dip in revenue and net income, EQB has reported a strong quarter for loan originations, particularly in uninsured single-family loans. What are your thoughts on these results?
Well, Janine, it's a fascinating case of resilience. EQB managed to increase its net interest income by 1% year over year, even as its adjusted net income dropped by 15%. The company has faced the challenges head-on, and it's interesting to see how they've navigated the economic uncertainties.
Absolutely, Steve. Andrew Moore, EQB's president and CEO, credited their strong fundamentals despite the economic challenges posed by tariffs and higher interest rates. It's impressive how they've maintained their focus on high-quality assets, with a loan-to-value ratio of 63% and strong credit scores among borrowers.
That's right, Janine. The surge in uninsured single-family originations by 28% is noteworthy. It reflects EQB's ability to adapt to market dynamics and capitalize on high-quality market opportunities. Their total residential lending balances have increased by 4%, reaching $20.6 billion.
And let's not overlook their efforts in decumulation lending, including reverse mortgages and insurance loans, which have grown by 45% annually. It shows that EQB is diversifying its portfolio, which is crucial in times of economic uncertainty.
Indeed, Janine. On the commercial side, EQB has made significant strides as well. Their CMHC-insured multi-unit residential lending rose by 29%, and insured construction lending grew by 31%. Over 80% of their commercial lending portfolio is now insured, which is a strategic move to mitigate risks.
It's a smart approach, Steve, especially with the rise in provisions for credit losses totaling $30.2 million. EQB is clearly preparing for potential challenges by ensuring a significant portion of their portfolio is insured, reducing their exposure to risk.
Exactly, Janine. And with the impaired loan ratio increasing to 156 basis points, EQB's strategy to de-risk their long-haul transportation exposure within the equipment financing portfolio is quite prudent. It's about balancing growth with risk management.
Looking ahead, EQB executives are optimistic about the second half of 2025, citing strong loan pipelines and insured securitizations. Their new EQ Bank Tower in Toronto symbolizes their commitment to long-term growth and operational infrastructure.
Yes, Janine, and as David Wilkes, EQB's head of finance, mentioned, they're focusing on fundamentals to navigate these uncertain conditions. It's a testament to their strategic planning and adaptability in a volatile market. Let's shift our focus to a recent development concerning private lending, Janine. The Financial Services Regulatory Authority of Ontario, or FSRA, is proposing to revoke the mortgage brokerage license of Quick Cash Mortgage. This comes after uncovering significant regulatory violations involving high-cost private mortgages issued to vulnerable seniors. What are the key points here?
Steve, this case is quite alarming. FSRA is targeting Quick Cash Mortgage and its principal broker, Joel Kellman, after finding that several high-interest loans were brokered to senior citizens on fixed incomes. Some of these loans had annual percentage rates exceeding 23%, which is extraordinarily high, especially for elderly clients who rely on limited incomes.
That's right, Janine. These loans, arranged between May and November 2022, involved amounts ranging from $300,000 to $940,000, with APRs between 21.95% and 23.46%. What makes this situation particularly concerning is that the entire loan principal was due at the end of each term, creating a significant financial burden for these clients.
Exactly, Steve. These seniors were left with repayment obligations that far exceeded their monthly incomes, putting their primary financial assets, their homes, at risk. FSRA's findings indicated that some borrowers were not fully aware of the mortgage terms, which raises questions about the transparency and ethical standards of the lending process.
Joel Kellman, the principal broker, is accused of failing to ensure the suitability of these mortgages for the borrower's financial situations. FSRA also alleges that he did not disclose material risks or declare conflicts of interest, particularly concerning ties to Canada's Choice Capital, which had interests registered on one borrower's home.
And there's more, Steve. FSRA claims that Kellman failed to maintain complete records and provide truthful information in his license renewal applications. The regulator is seeking to impose $120,000 in administrative penalties on him and revoke Quick Cash Mortgage's brokerage license, due to concerns about his integrity and compliance history.
It's a serious situation, Janine. FSRA has expressed doubt that the business could be carried on in accordance with the law and with integrity. Both Kellman and Quick Cash Mortgage have requested a hearing before the Financial Services Tribunal to contest FSRA's findings, so this story is far from over.
Yes, Steve. It's crucial for regulators to uphold standards in the industry to protect vulnerable consumers. These developments highlight the importance of transparency and ethical practices in mortgage lending, particularly when dealing with high-risk loans to seniors.
As we wrap up today's episode, let's turn our attention to the latest developments in Canada's mortgage and housing markets. The new government under Mark Carney has made some significant announcements in the throne speech, focusing on improving housing affordability. Janine, what are some of the key proposals?
Steve, the throne. Speech highlighted several initiatives aimed at easing the housing affordability crisis. One of the major proposals is to eliminate the goods and services tax on first-time home purchases up to $1 million. This move is expected to provide some relief for first-time buyers, although the broader affordability issues, like the disparity between wages and home prices, remain a significant challenge.
That's right, Janine. The speech also included a commitment to boost the pace of home building, with the ambitious goal of constructing nearly 500,000 homes annually. This plan involves a new entity, Build Canada Homes, which will facilitate affordable housing through large-scale construction and provide over $25 billion in financing support.
It's an encouraging step, Steve. However, as Christelle Mwamba from Mortgage Scout pointed out, the income levels required for down payments in major cities like Toronto and Vancouver are still daunting. Even with the proposed measures, many young Canadians are finding it difficult to enter the housing market. The gap between income and housing costs is a hurdle that won't be easily overcome.
Indeed, Janine. The median age of first-time homebuyers has risen significantly, with many now purchasing homes later in life. This shift is partly due to the high costs associated with homeownership and the need for substantial financial support from family members. Gregor Robertson, the new housing minister, mentioned that while prices might not need to drop, the increased supply should eventually lead to more affordable options.
That's a hopeful outlook, Steve. Yet, as Mwamba noted, the reliance on the bank of mom and dad is becoming more prevalent, indicating that the financial independence of younger buyers is still out of reach. The generational gap in home ownership is widening, and it underscores the need for continued efforts to bridge this divide.
Absolutely, Janine. The government's focus on collaboration between public and private sectors to ramp up construction is a positive move, but the road to affordability is long and complex. It's crucial that these efforts are sustained and effectively implemented to make a tangible impact.
Agreed, Steve. As the new parliament progresses, it will be interesting to see how these initiatives unfold and whether they can truly address the affordability crisis. It's a multifaceted issue that requires ongoing attention and action from all stakeholders.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.